When a motivated seller surfaces a distressed asset at 30% below market value, what is your first step? The Capital Success Investor Strategy Series for April 1st, 2026. Create value. Retire now. Today's episode, the liquidity imperative. Stay liquid. Move quickly. Win the deal. Why financial agility is the defining edge in today's real estate financing and refinancing landscape. In real estate investing, the difference between a portfolio that compounds generational wealth and one that stagnates often comes down to a single, underappreciated attribute: liquidity. Not the size of your holdings, not the perfection of your market timing. Liquidity, the ready access to capital that allows you to act when others cannot. Markets don't wait. When a motivated seller surfaces a distressed asset at 30% below market value, the investors who close in days win. When credit conditions tighten overnight and a refinancing window opens briefly, the investor with dry powder and a trusted financing partner captures the opportunity while others scramble. The simple truth is this: in a market defined by speed and access, being liquid is not a conservative posture, it is an aggressive one. The market rewards those who can move. The 2025 to 2026 real estate cycle has confirmed what seasoned investors have always known. Liquidity is not static wealth. It is kinetic power. According to data from PwC and the Urban Land Institute, total U.S. commercial real estate investment sales surged 16% year over year in the first half of 2025, reaching $221 billion, with private local investors and high net worth individuals leading the charge. These were not passive observers. They were liquid actors who moved quickly when others hesitated. The dynamics reinforcing this trend are structural, not temporary. Commercial mortgage-backed securities issuance in 2025 exceeded $120 billion, the highest level since 2007. Debt funds and non-bank financial institutions have emerged as the most highly rated lending sources heading into 2026. Capital is available. The question is whether you are positioned to access it. If 2025 was the year the real estate market reopened, 2026 is the year savvy investors can shift fully into tactical mode, finding even more attractive opportunities as liquidity rebounds. Let's look at the real estate outlook for 2026. The investors positioned to capitalize on this reopened market are not necessarily those with the most capital. They are those with the most accessible capital. Liquidity transforms a passive balance sheet into an active, deal-generating engine. Here's what liquidity actually means for the real estate investor. For a real estate investor, liquidity means more than simply having cash in a bank account. It is a multi-layered financial architecture that includes readily accessible cash reserves, active credit facilities, the strategic use of bridge and short-term financing instruments, and a portfolio structured so that capital can be redeployed without triggering cascading obligations. Now, a closer breakdown of the financing and refinancing equation. Nowhere is liquidity more consequential than in how investors structure and manage their debt. The relationship between personal liquidity and financing outcomes is direct. The investor who arrives at the lending table with strong reserves secures the transaction. The one who arrives with equity but minimal liquid assets often finds doors closed or terms punishing. The most successful real estate investors of the next market cycle will not necessarily be those who identified the best assets or predicted the exact trajectory of interest rates. They will be the investors who were liquid when opportunities emerged, who could move within days when weeks would cost them the deal, and who had financing partners capable of executing with the same urgency and precision their strategies demanded. Get started with your streamlined deal analysis today at capitalsuccess.us. This presentation is for informational purposes only and does not constitute financial, legal, or investment advice. Real estate investing involves risk, including possible loss of principal. Past performance is not indicative of future results. Consult a qualified advisor before making investment decisions.